Free morning brief audio. It is July 23rd. It is 8:30 a.m. Eastern Time, and this is for the U.S. stock market. I'm Rich Posson for Critical Point, and I'm also going to give you some clues of what we're going to post in a few minutes for the weekly update, where we will look at the very short term all the way to the very super long term. We look at a roadmap all the way out till the 2030s or later. We look at a roadmap for this decade, a roadmap for the remainder of this year. We're going to discuss the level 1, level 2 trends during the year, what's going on, what our expectations are for August. And so if you're not a subscriber, you want to subscribe, try that. You don't like it, if you cancel it in less than 2 weeks, the billing cycle is delayed by 2 weeks, so it's a way of getting a free trial. But you really want to try it for a few months, and if you'll try it for a few months, I think you'll say, wow, we're staying with this service for years to come here, because we look at everything very short term to very long term. There's something for everyone, and it is quite accurate, okay, and profitable. All right, so where are we for this week? Well, we had a level 1 sell signal last week. The market collapsed. Fantastic. And we were, even though the model actually ran a little bit behind on trying to pick a bottom, we gave you the warning to dive right back in on that crash, start nibbling at it, start thinking in terms this might possibly be a runaway market to the upside, and lo and behold, we got it. So level 1 bottom in place for the stock market. And again, you want to see the weekly update and to get ideas of what do we mean by that. How long are these different types of traders who actually control the stock market? We know who they are in terms of groups, not in terms of individuals, not in terms of specific businesses or funds, but we know who they are and what they're doing and how long it takes them to buy and sell. And that's far more important than picking price targets, and yet we also pick price targets. All right, so where are we on a short term, which I'm willing to give away free this morning? The model is bullish into next week. We've said that ever since Tuesday, that we want to be bullish into next week, even though we realize that we could be in some choppy, volatile markets. Maybe they do have to pull it back one last time to test recent lows or not. But we said the best forecast is to be bullish, that they basically just panicked, dumped, and then just realized, hey, got to buy it back, all right? And basically, we want to be bullish into next week. We see record highs coming. We give you some objectives, and really the range we've been using for a couple of weeks now is still valid, so you'll be able to see that on the weekly update. And the intra-week swings, the level 4 swings, meaning the level 3 is really how we do business during a month. It's the biggest up-down move price-wise during the month, okay? And we're bullish that move into next week. But inside that are the level 4 swings, which are really intra-week swings. I don't even call them trends, at least looking on a daily chart. Intraday chart, we might call them trends. But those level 4 swings are how we do business during the week. And they are a component and will be generally biased towards that larger level 3 trend. The level 4, yesterday we said, could be a running correction, meaning the market slows its pace going higher but does not drop the way it would normally would for a level 4. And that would be a sign of a really strong market. Well, it did that somewhat, but if you look in the intraday chart, you can see a quick stab lower and then right back up. That was the level 4 bottom. It worked, yet trading it, in my mind, it did not work. It worked analytically, it was there, we could visually see it, but overall, this really was kind of like a running correction, a sign of strength. The best level 4 forecast is this market's going higher into Sunday night to Monday, but that's only 70% probability. There's 30% probability they will take some profits today, and we're going to find out the level 4 was a little bit off the mark after all. But bottom line is I think it's probably going higher into next week. All right, now, the level 3 trend and level 4 trend swings are, of course, components of those larger level 2, level 1 trends, okay? And level 2 is the second most important kind of fluctuation during the year and occurs more often than level 1. Level 1 is used to help locate the high and low of the year, even though there's more than one of them during a year. We also use it to time long-term business cycles that can span just a few years to a decade, and then we can also use that to time super cycles that could also be just a few years but may span as much as a century or two, okay? And we explain all that in the weekly update as well. So the bottom line is this is a long-term bull market. We're going to see many twists and turns. We even have a number of how many twists and turns we're going to see of those level ones and of the 3-year or LT1 minor long-term cycle throughout this decade. All right, we've already got a roadmap of how many of those to anticipate. All right, and so the bottom line is, yes, we are bullish, but if you're not a subscriber, you really want to see the details, because even if you're a long-term buy and hold person, it's nice to know why your account is giving back profits or you're losing on your most recent purchase. It's also nice to know that you can come up with a few signals every year where you might want to save cash, raise cash, and then put those in with those signals, okay, during the year and try to buy those dips. It's also okay to just always put money in the market every month, but still know why your account is fluctuating, and then it gives you discipline, it gives you confidence to wait on those long-term signals that we're going to give you when it's time to take profits and reduce a lot of the risk going on, okay? All right, I mean, just think about the possibilities of dumping half your portfolio once a decade when the market drops 30 or 50%, and then buy right back in at about that, and then it goes to record highs. What's your account going to look like, okay? And then, of course, following these trends during the year can also be a way of diversifying time-wise to be a more active, more frequent trader, to maybe make some gains along the way and feel like you're engaging the market. So we offer something for everyone, from the very short-term trader to the very long-term investor. And then this stuff relates to the economy and can therefore relate to businesses and business planning. All right, have a great weekend and stay safe, stay healthy, and let's give the bulls a chance for today and on into next week. Past results are not necessarily indicative of future results. And please let people know of my new website, or check it out for yourself. It's still in development, but I got anxious and decided to put it out there. It's criticalpointpod.com. As far as signing up for the podcast, however, you'll still go to the old site of the current podcast presentation site of criticalpoint.podbean.com. Thank you.